Good morning, traders, and welcome to the Pirate Traders live stream. My name is Charles. Today we are going to talk about the ES, the NQ, and how they move through an auction process, right? How do we recognize where changes are taking place that might give us an edge in entering our trades? I like to use market profile software. That is what the chart is that you see on the left side of the screen. That is basically just taking the price information, the same information you get from candlesticks, and just displaying it in 3 dimensions. By seeing it in 3 dimensions, I can see not only where did price go, which is what a candlestick shows you, but how much time did it spend there and how much volume did it bring in there. By understanding those concepts, I can have an edge when something changes and there are opportunities to take trades. So that is what we are going to talk about today. If you have any questions at any point in the chat, please let me know what those questions are. Throw them up in the chat and I will get to them as quickly as possible. I talk about these things all day, every day, and have for years. So a lot of times I forget to explain the basics. So if I'm talking about something and it sounds like it makes no sense to you, please ask questions so that I can clarify. We got a survey up in the chat right now. Where do you think the market's going to go today? Up, down, or sideways? We'll leave it up there for another 5 minutes and we will get the community opinion. Please let us know. All right, so now let me get into my analysis. I should have started a few minutes earlier here, but I basically have 2 conflicting points in my mind right now. The first is that the market is bearish, okay? We had momentum to the downside. We then spent a day, we'll call it a day and a half, basically balancing, cooling off that momentum, and then we started momentum once again with the move lower at the end of the day yesterday. When we made that move, we created what we call a spike down. A spike down is a new low in the last hour of the day. Now, a spike is a very important thing because it gives us insights what's likely to happen the next day, and it confirms or denies whether that is likely to play out the way we think when the market opens the next morning. So by closing with a spike down, the market was telling us it was likely to go lower the next day. By opening inside the spike, it is confirming that it is likely to go lower today. And while I'm talking, it just made a lower low. Okay, so that is all very bearish and a reason to assume we can continue the momentum to the downside today, that the market is going to continue to go lower. However, there is one other piece of information I want to take into account. And this is thinking about the market in a different time frame. So what you're looking at right now, this is a weekly chart. So each candle represents 1 week of time. If you look at this blue box that I've got here, this is what we call a balance area. When the market is in a balance area, it's on whatever time frame it's balancing, whether it's on a 5-minute time frame or it's on a weekly time frame, it has the same structural system that it goes through, which is if it tries to go lower and it cannot, it will turn around and go to the upper end of that balance area. If it tries to go higher and it cannot, it will turn around and go down to the opposite end. If it can't go lower, back up to the opposite end. If it can't go higher, back down to the opposite end. If it can't go lower, back up to the opposite end. Okay? So that's what a balance area is. Well, yesterday's trade, that low where we closed, was that balance area low on the weekly time frame. So intraday, from one day to the next, we might have momentum down, and the spike down might be telling us, confirming this morning that we still have that momentum. But this is also a really great place for the market to run out of steam and turn around and start coming back up. And the way that that would play out is we would probably spend the better part of a day kind of grinding around this balance area low, making it look like we're going to go lower and getting a bunch of people short, but then turning around and wiping them out by a quick move to the upside, getting everybody long, thinking we're going to get a bounce, and then whoosh, wiping them out and coming back down. That sort of choppy, sideways, very tricky day, those often happen at a balance area high or a balance area low. Now, that doesn't mean it has to, right? We could blow right through it and make a huge 100-point move to the downside today. I'm not saying we have to have a choppy sideways day, but I'm just saying the probabilities favor it. I was also looking at this trend line from the more recent, the more recent lows in the weekly, and we bounced to a tick off that trend line yesterday. So again, Doesn't mean the market can't keep going lower this morning. It just means this is a place where buyers may choose to step in and try to reverse things back up. So if we're bearish intraday, we want to take that into context. We don't want to be falling in love with trades. We don't want to be forcing our way into trades. We want to be cautious with our entries and quick with our profits. Okay? Now, let's just take a second because I want to put this in context. I know there's some people watching right now that are new to the channel and don't know what the heck I'm talking about with these balance areas and what they represent and how they work. So I'm just going to show you the last time we had one of these balance areas at the all-time highs, where we went sideways for a series of weeks at an all-time high. Okay? What happened when we broke out of that balance? Well, the first thing that happened was we made a large move to the downside. Okay? It was more than the distance of the balance area. Then we came back and we back tested that balance area low to see could we re-enter and rotate to the opposite end, but we could not. So again, that caused an even bigger sell-off in price. The market then turned around and for a third time tried to re-enter the balance. They were able to get in, but they were not able to get to the opposite end. That caused an even bigger sell-off to the downside. Okay? So just recognize that right now we are here. We are sitting right at that balance area low. So while the probabilities favor a choppy day, if the market breaks lower today, it could lead to a very large sell-off in the days ahead. Okay? And that is why this balance area is so pivotal, which is why we're expecting chop, right? Because if the buyers let this market break out of balance, they're likely to get a big move, probably down towards the 5700s. So they don't want to let this break lower today. They want to hold it. They want to hold the line here if they can. And so even though we have bearish momentum, we are keeping in mind that this is a place buyers could step in. Any questions on any of that from the chat? In the meantime, if you have not yet given us your opinion on where you think the market is going to go, now is an excellent time. We just poked below the overnight low and failed, increasing the odds we're heading for the opening price. So being right back at the opening price when you have to make a decision about where you think the market is going to go is always a fair place to be. Also, if you have not hit the thumbs up button yet, it makes a really big difference. It helps the channel quite a bit. I don't do a lot of public live streams like this, and so it really helps the YouTube algorithm if you guys, when I do, smash that like button. And if you do smash that like button and YouTube sends me more people, I will be more inclined to do more of these public streams. So if you're liking what you're seeing, give me that little thumb. All right. So the poll is over, and we've got, oh, wow, okay. 45% think the market is going to go down today. 28% think the market is going to go up, and 26% think the market is going to go sideways. If history repeats itself, that means the market is going sideways today, because generally it is the smallest group that ends up winning. But, yeah, I mean, that's a pretty even split. Half of you think it's going down, half of you think it's going sideways or up. So you know what that means. That leads to choppier markets when there's more uncertainty, when there's a lot of mixed opinions about things. Okay, so now we are back inside the previous day's range. We're turning this area around the opening price into resistance. I do not think that's going to hold. I think we need another poke through the opening price. Again, at a balance area low, they love to convince everyone to go short. So, of course, they take you right back to that overnight low because that's where everybody's like, oh, shit, I got to get short. I got to get short. I got to get short. But then they come right back up through the opening price and they squeeze the buyers, which we should see right now as we start to take out a few of those buyers. Okay. So right now I'm still bearish. I will remain bearish as long as we remain below 59.08. But I expect we're going to do a little sideways dance here inside this overnight range for a bit. Do a little dance, make a little cash. We're trading now. Woo! We're trading now. We're trading now. We're trading now. All right, I'll stop. I swear I'll stop. Good morning to Trevor. Welcome, welcome. Tommy in the house. Good morning to you. And all your fellow pirates. Stephen W., welcome, welcome. Vu, good to see you. Nap is here. Kevin in the house. Will, good morning. Zach L., welcome, welcome. Billy K., good morning to you. Nor Auto Trading in the house. Johnny Silver is here. Nap says we got Chi-Town PMI at 945. We'll look out for a little volatility there. Oh boy, good morning to you. Zach says it's the last day of the month, a big move. The last Friday of the month is not uncommon. Yeah, I'm not sure what to do with that piece of information for today because, you know, the way I see it, the market is either going to chop around all day. You know, obviously we're making lower lows, so we're chopping to the downside, but we're either going to chop around all day or we could have a massive liquidation. But I would definitely not be calling for massive liquidation purely because it's a Friday. So we'll wait and see. If we start to get some momentum, brother, I'll be all over it. Danny G in the house smashed the like button. Appreciate you. Half of you have smashed the like button, and that's the cool half. Johnny Silva says, hit the darn button. You have a very clean, damn button. Okay, damn. Danny G, good morning to you. Frito in the house. Sook is here. Debbie B. John H. Hi, y'all. Oh boy says, so the Trump talks on the tariffs are coming back yesterday. Did send the market lower. Yeah, but I would have argued that the market was going to go lower no matter what. The timing of it was because of Trump, but the momentum was to the downside either way. DNK says, if I were to go long for a look below and fail, what would my target be? It depends which look below and fail. If it's the overnight low, the target would be the opening price. If it's the previous day's low, the target would be the resistance at 92-ish. So we got this node right here. If this was the look below and fail I was trading, I'd be targeting the move to there. If this was look below, I'd be targeting a move to the open price. So again, today I'm cautious with my entries and I'm quick to take profits. I'm not falling in love with trades. Because I think the momentum is down, I think the market wants to go lower today, but I think it wants to do it in a very choppy way. So whatever trades you're going to take, the first potential place to take profits is a great place to take profits. And if the market keeps going, you just re-enter the trade on the next dip, because what I'm implying is it's going to keep dipping and dipping and dipping and ripping and ripping and ripping. It's going to keep chopping up and down and giving you opportunities to re-enter. Good morning to Scalping Strategy. Johnny Silver says you're scaring the sharks. That's the idea. That's why I sing. I sing to keep us all safe from sharks. Seven Mile Reach says the weekly chart also has a channel going back to October 2023 where the bottoms line up with the current location. All right, I'm interested. I'll take a look. Yeah, that's like a mother of all trends. Yeah. I wouldn't personally draw that trend line from there. Yeah, that trend line doesn't jump out at me right now. I see what you're talking about. It does look like a channel, but I don't see it as being, like drawable. Another way to explain it would be I'd say that's a very messy channel. It's a little bit messy. So my main focus right now, looking at the weekly, is very simply if this thing breaks to the downside. In particular, if it comes back and it back tests. But if this thing does break to the downside, that's giving us a move to 56.20. So if I'm a bull, I do not want to let that happen. Oh, looks like I missed the PMI. Well, they barely disappeared anything, so yeah. Nothing burger with fries. Okay. So again, still think it's going to be very choppy this morning. Still think we need another poke to the upside. But I'm now watching this node right below the opening price, right here around 58.79. If that starts to hold as resistance, if we keep poking at it and poking at it and poking at it, it will lead to a sell-off back down towards the lows. I don't think that's what's going to happen. I think we're going to poke through, but I'm watching it to see because it does feel like the market is beginning to build resistance here. And of course, you know me. I'm watching those ticks to see what happens in relation to the zero line. If the ticks go down, it's sellers, it's resistance. If the ticks go up, it's a bounce. And the ticks went up, no resistance. All right, more chop, guys. More chop. J Wave says, how long of a period is your orange volume profile on the left? So that is the cumulative volume. It is basically all the volume that has ever traded at these levels. So I just go back as far as I have to. Again, I think right now I have it set for like 300 days or something like that. That doesn't mean you need to have that many. 120 days right now is how far I go back. But basically, I just go back as far as I need to. So if we start to go lower, well, now I have to include a lot more data, right? If we go lower again, I have to include a lot more data. The goal is just wherever we are on the price axis, I want to combine enough previous volume to see where the business was the last time we were at this level. And generally 100 days is enough. But if we start to get a pullback here, I'll probably have to add some more. Probably have to take it back to 300 days. And so you say to me, well, Charles, who cares where the market was trading 300 days ago? What does that matter? It's a new day. Anything can happen now. Well, it does matter because every person who enters a trade, and by person I also mean computer program, has to have a way to choose where to enter trades and where to exit them. The thing they use to make that decision is where people have entered and exited trades in the past. High volume nodes. So if the market is moving up, it's looking for that next high volume node so it can start taking profits. If it's moving down, it's looking for that next high volume node so that it can start taking profits. So if all you got to know is where did the volume trade the last time we were at this level, and you'll have a pretty good area to look for changes in the market. Can this level hold? If not, if it breaks, what does that mean? And so on and so forth. Michael says we have liquidity in the order book at 58.50. I have a feeling it's way less than we have above. Yeah, sure, there's some liquidity down there, but I don't know why that's catching your eye and all of this is not. Percy in the house. Welcome, welcome. Tommy says, are you using Sierra charts for your TPO? No, it's called Window Trader. There's a link in the description of the YouTube video. I have heard good things about Sierra chart. The general consensus that I get about Sierra is that the learning curve is tough. Like when you want to first program it, when you first sign up, it's a bit tricky. But once you have it all set up, it works great. Hello, Chop Zone, my old friend. Chopping sellers up again. Take it down and then squeeze them up. Then reverse it back down and get them short again. Then pull it back up and squeeze them one more time to feel the pain. It's not insane. It's a market in a chop zone. Zach says he heard from Scott they had bad customer service at Sierra Chart. Yeah, actually, I think I've heard that too. I've heard that it's tough to get somebody on the line to help you out with technical issues. Nor Auto Trading says that's it for today. He says, I'll be enjoying some green USD this week. Well, good, because if it's not green, it's not real. That's just the way it works. Thank you very much for stopping by. We will see you next time. So for those of you that are tuning in for the first time right now, first off, smash that like button. Give me that thumbs up, pretty please, with a pirate's hook on top. Also, if you're curious about what I'm thinking for today, I think the market wants to go lower today. My target to the downside, my first target to the downside is 58.55, but I think it's going to be very choppy. So I don't think we're just going to go in a straight line. I think we're going to grind and grind and grind and then just kind of end up down there in a few hours. So don't fall in love with trades this morning. The momentum is to the downside, but they will likely try to convince everyone to get long first. Then they take it down. That is the sound of chopping. Johnny says, green or gold? Better? I don't know, man. Gold is not easy to buy stuff with. If you want stuff in exchange for your money, you definitely want the green money. Tommy says, what data provider do I use for Window Trader? I am using IQ Feed, but it's the most expensive one. So bar charts is good too if you just want to, if you're considering signing up. Dan says, topside risk or reversals? Can you phrase that differently? I'm intrigued. What do you mean by that? Ken says, I'm trading gold right now and I just made some green. There you go. He's saying, I don't know, maybe we get a bounce. If you're talking about on a bigger picture, so if you're saying like let's zoom out and look at the daily time frame. If you're saying to yourself, you know, maybe we get a bounce today and we get a big move to the upside, I would argue against that thesis, at least for now. And the reason is because we just had balance. Okay. So the way the market works is it builds up momentum. It goes sideways to kind of build up tension, like a jack in the box that you're winding up, and then it breaks away from that. And so that's what we call momentum, when it starts to make its move to a new location. So we had balance in here, and then the market broke and it created momentum. And then we had balance once again. 2 days ago was an entire balancing day. And then yesterday, the first chunk of the day was a balancing day. And then the second half of the day, we broke out of that balance and we started momentum. So the best way to think about momentum is that it's like a speeding train. It is very rare that a speeding train is just going to magically reverse and start going the opposite direction. That's not how it works. First, the train has to slow down. Then it has to reverse its direction the other way. Then it picks up steam and it goes the other way, right? It is very, very rare that you get a true V-shape reversal. And when you do, you often get a little bit of time to figure it out. So take this one right here as an example, right? You had some balance, you had some momentum, and then you had this day right here where technically the market went higher, but it really went sideways. If you look at the candle, it just pushed up and came back down and pushed down and came back up and then closed basically where it opened. So you had a balanced day to tell you the momentum down is over before you got that next slingshot up, right? Does that make sense? So if yesterday we just began the momentum, if the train just started chugging to the downside, it's probably not going to instantly reverse and go straight back up. If it is going to make a low in here, it'll probably spend a day just going sideways. Then it'll start to roll over and come back up. Now, it would be totally different if you were asking me that question at this time yesterday when we were inside the range up here. Then I could say, because we had started the process of balance, there's no reason we can't go from balance to momentum up. But we didn't. We went from balance to momentum down, and we're still in that momentum. And that's what I talked about with the spike down this morning. So no matter how the market chops around, for however long it chops around, as long as we're below the base of that spike, as long as we're below 59.08, bigger picture, the market still has momentum down. So I can't even think about the market going up unless we got all the way above 59.08 and I started to see some buying up there. Because right now, what my mind is telling me is any move up is just to trick people into going long. Then whoosh, they're going to bring it right back down and wipe them all out. Now, I might be wrong, right? They might get up there and get support and break through and find support and keep going. I'm not saying that can't happen today, but I'm saying as of this moment right now, that is less likely because we have momentum down on a daily time frame. And so why would I be assuming the less likely thing is going to happen, right? Okay, so earlier somebody asked me if I was trading a look below and fail of the previous day's low, where would I take profit? And the answer is right now, right here. Why? Not because the market can't keep going, but because as we get closer and closer to the overnight high, the odds are higher and higher that we're going to get smacked right back down. So I would lock in those profits, and then if we get above that overnight high and get support, think about re-entering, rather than trying to stay and just hoping it's going to get to that overnight high. And that's because I'm expecting a choppy market. And it's just better to lock in profits and then re-enter. When you can learn to understand the context of what's happening, you can adjust your trading on that particular day to that particular market. Then you can handle every type of market. Even a market that's crazy confusing because you know to just not do anything, which sometimes is the best edge. Back through the opening price again. Got them long, and now we squeezed them. Yay! So market's saying to itself, listen, this has been working. Maybe I try one more time. Maybe another poke to the upside. Get some more people long. Bring them back through the open and squeeze them. Let's see what happens. Because it's a chop zone. And that's just how chop zones work. They freaking drive you berserk. Michael says, would you be considering that they could come back to fill in the single prints they left behind yesterday? Absolutely. But again, let's talk about probabilities, right? One step at a time, because you can't just make a statement like they're going to come back and backfill the singles. Well, why? Right? What do you need to see ahead of time to know that that's going to happen? So as we discussed, everything is bearish as long as we're still below the base of the spike. So does that mean they can come back and backfill this first set of single prints? 100% yes, it does. They can do that. Should you be bullish if they do? No, because they could get resistance and smack the market right down as soon as they do, right? But if we get above the base of that spike and we get new buying, we're seeing support up here, we're bringing in new buyers, then the probabilities of filling the second set of single prints become very, very high. So it's the real opportunity is not in backfilling the first set of single prints, unless you're looking to sell resistance. The better opportunity is waiting to get through them, and then with new buying, you could target the second set of single prints. But, you know, it's a 20-point move. So plenty of money to be made in a 20-point move. But right now at this moment, there's no part of me that thinks we're heading up for the base of the K period single prints. Why? Because we have momentum down. That's why. So I'm obsessively watching the base of that spike. That's my deal or no deal level where everything changes. Oh boy says it looks like they're trying to hold the market. No crash for you. Yes, but again, I just feel like that's only for the next few minutes, right? It's just they're using the morning to get everyone long and then using the afternoon to squeeze them. So you are correct that as of now, they are defending this balance area low. Wouldn't let it go any lower than here yesterday. Wouldn't let it go any lower than here last night. Wouldn't let it go any so far lower than here today. So yeah, they are defending these lows, but the sellers are still in charge. So be wary. Hello, Chop Zone, my old friend. Scalping Strategy says, Charles, is the halfback 50% of the overnight movement? The halfback is always half the range. So just literally halfway between whatever the high and the low of the range is. So the halfback of the overnight, which you see as this white line right here, that's the exact center of the overnight's range. And as of now, obviously it changes throughout the day with price, but as of now, our halfback is right here intraday. So they're pretty closely aligned at the moment, which is just a sign that we're still doing what they were doing in the overnight, which was chopping around inside the spike. And the chop will continue until morale improves. As long as going up keeps bringing in buyers, they're going to keep doing it. And as long as pulling back down very quickly wipes them out, they're going to keep doing it. Jim Dalton always says traders will do what works until it doesn't. And right now, chop inside the spike is working like gangbusters. So they're going to keep it going. I'm also keeping a close eye on these liquidity levels above us around 5907 and 5920. If those randomly disappear, that will likely be when the move to the upside ends and the market starts to reverse and come back down. Now, again, I'm not predicting that they're going to disappear, but I'm just saying if we see that, if we see one of these just poof, randomly disappear, and especially if at the exact same time they start to build it up lower, look for price to turn around. So I'm keeping an eye on that as well. Danny says the spike is the last hour of yesterday's session. Yes, sir. So when you make a new high or a new low for the day in the final hour of the day, that is the market creating a spike. If they close inside that spike, then you carry it forward as momentum for the next day. And the idea is very simply, if these people are willing to go short at the end of the day, it's not because the market's going to randomly turn around and go up the next day, right? They got short at the end of the day because they thought the market was going to keep going lower the next day. And so as long as you stay below the base of that spike, none of these sellers have a reason to get squeezed. They may even add to their position, right? But as soon as you get above the base of that spike, well, now everyone that went short in the last hour of the day, anyone that shorted in the overnight, anyone that's shorting right now, they all get squeezed if the market can get above the base of that spike. So that's why it's a change in the market level, where I'm bearish as long as we're below it, because these sellers are still in control. But if we get above it, that's when things shift from being bearish to bullish intraday, because then you squeeze, and squeezing creates momentum. And I can't, when the market opens, know what's going to happen. I can't know if we're going to get smacked down and continue lower without getting above the base of the spike or not. But when we get to the base of the spike, I know what action to take. I'm either shorting because it's resistance, or I'm longing because we break through and turn it into support. And just knowing where to do business is all I need. I don't need to know ahead of time what business I'm going to do there. I just need to know what the opportunities are. Oh boy says, take a look at the internals. The AD SPD is very bullish. I'm going to look, and if it's not very bullish, I'm going to be disappointed in you. All right, yeah, I'll give it to you. It's bullish. You are right. Tommy says, I just started watching Jim Dalton's masterclass webinars on YouTube. Well, enjoy. That's the man right there. Willie T in the house. Good morning to you. Zach says, what are your thoughts on using GEX to maneuver around the market makers? It is something I'm very interested in, but I am not skilled at, not yet. I still have a lot of learning in that regard. Basically understanding how the flows, the options flows, affect the price of the underlying assets. It's real. It's very real, but it's just tricky. It's a very nuanced read. So it just takes a lot of time to build that skill set. Ken says, has anyone read Jim's new book yet? That's a great question. I did notice he just released a book. I have not bought it myself. Anyone read it? Knapp says, neither the volume point of control nor the time point of control followed yesterday's move down. It remained inside the previous day's range. That is true. And that is important information once the spike is done. So if we get above the base of the spike, then we start talking about those references. You guys know me. I got to keep it simple. Right? Otherwise, I do too much thinking. And then too much thinking gets confusing. So it's a very simple formula for me here today, which is, as long as we're below the base of the spike, I assume this market is going lower. Okay? However long it takes to bring in the sellers, the time is not the issue to me. I'm expecting a lot of chop. I'm expecting to spend hours going sideways first. My point is, as long as I'm below the base of the spike, I'm not, that's the thing. That's the information that matters and the only thing that matters. Now, if we get above the base of the spike, yeah, let's start talking. Let's talk about some single prints that need to be backfilled. Let's talk about a virgin point of control that wants to be tested. Let's talk about a weak high that needs to be repaired. Let's have that conversation. But I don't want to even think about it or worry about it or, do anything with it until first I see the market get above and stay above the base of that spike, because that's the number one most important piece of information. That's the newest piece of information. What was happening in the first half of the day yesterday no longer mattered by the end of the day because something had changed and we'd created momentum down. The market opening today, pretty much where it closed yesterday, is a confirmation that that is still the most recent and most important information. So I like to take it one thing at a time and not allow myself to get too distracted. A little distraction's okay, but too much makes me off sides, makes me misunderstand what's happening. So right now, I am obsessively watching that spike down and nothing else. And these high volume nodes and waiting to see if they disappear. Because like I said, I have a feeling these will disappear and then we get that move down. Whether it's 5 minutes from now or 2 hours from now, that's what you'll see happen. Zach says, I'm planning to enter a short at 59.05, targeting move to 58.50 with a stop at 59.21. So you're going to go short here with a stop up here and a target at 58.50 down here. Okay. So I like it. I like the trade quite a bit. You could probably take on a little less risk by putting your order a couple points higher. So I would say if I was looking to short there, I would short a tick or two below the base of the spike down. So I'd be looking at, 59.07, 59.0750 for the short. The stop is great. Nothing wrong with that stop. And the take profit is reasonable. I'd probably lock in profits at 55 just because it has a higher probability that the market will get to 55 as it's an untested point of control than necessarily 50 as a magic number. But yeah, the fundamental idea is there. If the market pushes up into the base of this spike, it should not spend time above it. It should get smacked down. And so you'll find out right away if you're right or wrong. And those are my favorite trades. My favorite trades are trades where I'm patient for my entry, but then I find out if I'm right or wrong pretty quickly. You know what I mean? So I don't have to sit in pain. Whereas if I force entries too quickly, then I got to sit and wait and wait and wait and wait. Oh my God, is it going to break? Is it going to hold? Oh my God. We got 117 people hanging out, 69 likes. As much as I don't want to ruin a good 69. Can we get to 100 thumbs up in today's stream? Is it even possible? I tell you what, why don't we make a deal? The 116 of us right now. If before I end this stream today, we can get to over 100 likes, I'll do another live stream on the public YouTube next week. How about that? See me next week. How about that? Can we get to 100 likes? Are there 24 people that are thinking they could do it? They could push the thumbs up button. any laggard likes. Okay, moment of truth for the market. We are now going to poke up above that overnight high. Why do I think we're going to poke above it? Because we have momentum up, very short term, intraday, just for the moment, momentum up, and we have a weak reference in need of repair. So there's a pretty good chance we're going to poke above that overnight high. The question is, what happens when we get there? How much time do we spend up there? Does the volume just instantly taper off like it did at the overnight low? Or do we start to spend time up here and stay up here and bring in volume up here and keep the ticks above the zero? We shall see in just a moment. Obviously, you guys know my vote is for a smack down, a smack right in the mouth. Michael, what's the spread on that 100 likes? Woo, woo, gambler alert. RK says, all this chop doesn't feel like we're up 50 points from the low. You're right. It doesn't. Johnny says he'll take the over. We're at 85 likes. I'm not great at math, but that means 15 of you have to be willing to hit that thumbs up button to make some magic happen here today. Maybe I haven't earned it. I'll keep trying. Dun dun. Dun dun. Okay, we're this close to the base of the spike down. We should be able to tag that base of the spike down. One more little poke to the upside. It would be unusual to come this close and not at least test it. Okay, there's the test of the spike down. So now I'm watching those ticks. Because one of two things happens here. Either the market tapers off with volume, less and less volume, and the ticks start to push their way lower, getting below the zero line and staying below it, in which case price reverses all the way back down another 50 points to the low. Or we get through the base of the spike down, and then we start to spend time up there, and we start to bring in volume, and those ticks hold the zero line and bounce. If we get that, we start making everyone cover their shorts, and then we momentum up. So we are literally dancing on a razor's edge. Is this the end? The end for the buyers, my friend? Or are the sellers from yesterday fixing to get squeezed? Okay, so at this point, technically the market is one time framing higher, but I would not be longing the highs. Because we left behind these single prints, there's a real chance that they still get that whoosh I'm talking about where they rip everyone's face off to the downside. So I would need to see new support to be willing to get bullish for continuation to the upside. However, the probabilities now favor that we will either find support at the overnight high, 59.01, or find support at the base of the B single prints, 58.88. So let's see what happens. Obviously, we have not gotten any real short covering yet. How slow can you go? How slow can you go? This tempo is just exciting. Zach says, okay, I'm in the trade. So if I was in a short from the base of the spike down from yesterday, with the market one time framing higher, I would treat this differently than I would normally treat it, which is I would move my stop a tick below my entry. Now, the probability is I will get stopped out, even if the market continues lower. But I would rather that happen than to be in a short while the market is one time framing higher if it finds support right now at the overnight high. I mean, if it holds the overnight high right now, it can start really pushing to the upside. So if I'd gotten short at the base of the spike, I'd be willing to give up on it because we're one time framing. It's just very different to be here in the C period as it would have been in the B when we were still in the initial balance. Speaking of which, we just got support at the overnight high. That is bullish to see. Can they hold it? Okay, no support at the overnight high. We're looking at the base of the B period single prints, 58.88. Can they hold that? Can they hold it? Remember what we talked about when we were at the base of the spike? What were we looking at? Looking for taper in volume and time. This is the base of the spike. How much time did we spend above it? Very little. How much volume did we bring in above it? Very little. Did that volume taper off? Yes, it did. So now what's the next thing we were watching for? The ticks. Can they stop going up and turn around and start going down? They did. Can they get below the zero line and stay below it? We will find out at 58.88. If they hold support here and they bounce with the ticks and they bounce with price, I'll be bullish for continuation to the upside. If the ticks fail and price passes through here, bearish to come back down to 58.55. The hard part? Waiting. We're at 89 likes. If you're just tuning in and you haven't given the thumbs up, I'm telling you, it's good luck. I don't know it to be a fact, but I bet it increases your chances of winning in your trading. Frito says this is based on science. Yes. If you have a loose description of the word science, absolutely. Uh-oh. What disappeared? Ramp, 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 ramp. That note of liquidity, 59.20 we were talking about. What do we say? We said as soon as it disappears, this thing stopped going up and starts going down. Look at that. Look at what it did. Son of a bitch. Seven Mile Reach, you were just the sweetest. He says, my credit card got charged today by the pirate. Couldn't be happier by a credit card charge. I've never heard anybody say that. Appreciate you, brother. Tommy using the custom GIF thing on the membership, the fire. Appreciate you, brother. Let that fire burn. Burn, baby, burn. Disco Inferno, burn, baby, burn. Okay, so here's my analysis as of now. I know this is going to sound super confusing. I wish when the markets are choppy like this, I wish I could just be like, it's going to go exactly to this level and it's going to reverse here and it's going to do that. But they use time. They use tempo as a way to fool people into what's happening. I think this thing needs one more poke to the upside. And here's my reason for believing that. We checked off every box to reverse this thing back down, to squeeze the buyers, but we haven't done it. We got the ticks below the zero line. We got rid of some of the liquidity in the order book above, but yet buyers are stepping in. They shouldn't. They should let price come down a little further and buy the dip. They should buy it when it's on sale, but they're chasing into these longs. So that tells me the game they've been playing this morning, which in my opinion is they're pushing it higher and higher and higher to get more and more people long. I don't think that game is over. I think they're going to do one more push to the upside. The NQ just found support at the overnight high, and it has a very weak high. Okay? We still have some single prints that need to be backfilled, and it's a very low volume high. So the NQ wants one more poke to the high. And then when I look at the Bookmap chart with the icebergs, there is an untested iceberg up there as well at the high. So now earlier today, what did I say? I said, if we can get above the base of the spike right here, and we can get some new buying, we can start to get bullish to retrace yesterday's range. So I am saying I'm not that bullish yet. I think we're going to get one more poke up here, but all of this still feels like a fake out to me. The tempo, the way it's moving, it feels artificial. It's not real buyers who want to take the market higher all day. It is bots and computers that are trying to convince us of that. It's trying to convince us this market wants to keep going higher all day. So I am bullish to test the high once more, but not beyond it. My guess is the same thing that happened the last time when we got to the base of the spike. We spent very little time and brought in very little volume and then reversed right back down. I suspect that exact same thing is going to happen the next time, and the next reversal will be the bigger one. There's this expression that Jim Dalton uses: traders will do what works until it doesn't. Slowly grinding up at the highs so far this morning has continued to bring in more buyers. And that's what the market wants to do right now. It wants to get everyone it can long. And so if it's still working, why not try with one more poke? That doesn't really mean the market has momentum, because those short-term traders that are longing right now, they're probably not going to long if we get one more poke and come back down through. And that's when they get squeezed. So I am not bullish yet, but I think we're going to go up. And so you say, Charles, is there any other signal that you could have seen that you didn't see that makes you less bearish? Yes. We talked about when the liquidity disappears from up here, it means the market is ready to roll over and start heading down. But what else did I say? We should see it start to show up below. They should shift it from here to here. Then we know the market is ready to make that move lower. They did not do that. So that's why I think they want one more little poke. Then they come down. And so you say, Charles, that's annoying. Why won't they just, if they're going to go lower today, why won't they just open and go down? Because then very few people would be in trades. If they can convince everyone to go long first, then reverse it later on in the day, they got all those extra contracts to chew up as those people get squeezed. And that's what this feels like to me. They're only taking it up to smack it back down. Any other questions from the chat? Anything at all? Questions for the pirate? Zach says, I'm still short. As I have told you, if I was short, I'd move my stop below my entry. If it means I get stopped out and I'm not in the trade to the downside, that is okay in my book. I do not like to be short when the market is one time framing higher. Johnny says, can you explain single prints? Single prints is when the market spends less than 30 minutes in a particular location. So when you look at the TPOs, when you look at the letters, if there's a set of letters that are by themselves, where it's just one letter, that's a single print. Okay. So you can see from yesterday, there's a set of single prints here. And from today, there's a set of single prints here. Now, what do single prints mean? Well, they mean different things at different times. Everything is context, right? When you first create a set of single prints, it is a sign you have a little bit of momentum, like just for that moment. So in the C period, when we opened up here and we had all those single prints we left behind from the B, I bet we had a little bit of momentum up, okay? When you first create single prints, the highest probability is that you will backfill them, which is why I said we need that one more poke to the upside. Because what should have happened once we failed at this overnight high is we should have come back for those single prints, but we didn't. So the first thought is the market should come back to those singles. If that doesn't happen, it is the market telling you exactly the opposite, which is that they don't need to come back for those singles. They're just going to keep going. They have momentum. If those single prints are there at the end of the day, it's a sign that you have momentum. So we left behind two sets of single prints to the downside yesterday. That's a sign we have momentum down today. And look, we made lower lows. We kept that momentum going. Johnny Silver says, what color tie are you wearing? Trick question. I'm naked. Zach says, what is the ADSPD and the ADD? Well, the ADD is the advancers versus decliners. If you use the ticker ADD, it's showing you the advancers versus decliners for every stock that's on the NYSE. If you use ADSPD, it just shows you the stocks in the S&P 500. So it is the stocks going up versus the stocks going down, the advancing stocks versus the declining stocks. So if more stocks are going up, they'll be going up. If more stocks are going down, they'll be going down. If it's about the same, they'll be going sideways. So today there is slightly more stocks going up than down. Okay, moment of truth. We got that poke up. Did we get rid of that iceberg? Not yet. They brought in another one. The game continues. They brought in another 10 icebergs. Oh, boy. Oh, boy. These bots. Nunez says, Charles, would you agree that trading below the spike is bearish and trading above the spike is bullish? I would, but the caveat that I just gave is it's about how much time and volume they bring in above the spike, which they have not been able to do. Look, they just did it again. Just right now. They poked above the spike again, and how much time did they spend there? Fucking nothing. 1 minute, and then they came back down. So, yes, if they can start to spend time and bring in volume up here, then for sure, we're heading for the next set of single prints and probably all the way up to yesterday's POC. But they just haven't convinced me that's what they're doing yet. I feel like as soon as this disappears, price comes right back down. So call me overly cautious, but that's the way I feel. Taper is such an important concept. When you get to an important level on the chart, just because you got there doesn't mean anything. It's what happens when you get there. Do you get new buying above that level or new selling below that level? Do you get new volume? Do more and more and more people want to do business? Then you look for follow through, right? Zach says the icebergs are accumulating orders. You know, I have not found it helpful at all to try to define what the bots are doing, what the icebergs are doing, because you never know if they're accumulating or they're taking profits. What you can know, particularly when you see a situation like this where there are 10 different accounts that have each traded one contract, you know it's fake. Nobody's actually trying to get short here. It's one computer playing a game on another computer and using those orders to fuck with the algorithm. Thank you, Tommy. Great job. We'll see you next time. Come on, iceberg. Do it. Do it. Do it. Boom. So that one little poke gave them 230 stops from a single account. Someone somewhere just got 230 contracts stopped out. And that might be all the liquidity the market needed to turn around and come back down. I'm looking for a bounce in the ticks from where it is. Does it move up or down? Up. Okay. We have new buying. It's bullish. We can trust the momentum. So what do I mean by all of that? So as we talked about this morning, there's one of two things happening. Either the market sells off, new sellers pile on, and we continue the momentum lower, or we get above the base of the spike, and then we start to bring in new buyers. What happens if we start to bring in new buyers, which we're doing right now at this exact moment? Then we cause short covering. We start to cause anyone who went short in the second half of yesterday, in the overnight, so far today, they're now all forced to exit those shorts. Okay? That creates upward momentum. So I am no longer interested in the VPOC at 58.55 as a target. I am now interested in the base of the K single prints down at 59.31 as a target to the upside. What do I need to see? At this point, I just need to see the market continue to one time frame. We left behind a set of single prints in the B. We talked about that. If you leave them behind, it's a sign you have momentum. So we have momentum. If they can hold the support right here at the C period low, there's no reason on earth we can't start squeezing sellers from yesterday for the rest of the day today. If they get below that C period low, well, then it was a liquidity grab and they wipe everyone else. They wipe everyone out to the downside. I no longer think that is the case. I now think they want to take the market higher. So I am bullish as long as we stay above 58.94. You got support at 59.04, 5,900, and then you got a low risk long at 58.95. Any of those are acceptable entries, targeting a move up to 59.31. Okay. As long as we continue to make higher lows throughout the day, each 30 minutes, assume price can continue to go higher. Whenever we make a lower low with price, assume that the move up is over and the market's going to chop around sideways for the rest of the day. With that, I'm going to wish you all a happy day of trading. Unfortunately, we only got 94 likes, which means I won't be doing one of these live streams publicly for you next week. You're going to have to pay the $20 to join the Pirate Traders Brigade. If only 5 of you had pushed that like button, we would be getting another free one next week, but it just didn't happen. So I guess I'll just have to say goodbye. If you are thinking about joining the brigade, sign up. It's $20, which is nothing, right? If the market makes its move, as I now think it will, to the base of the single prints down, that's 20 points from here. Okay? To make $20, you need half a point on one contract on the ES. So I assure you, if you choose to sign up and pay the $20, over the next month, I will give you opportunities to make back that money 50-fold. And so I encourage you to consider joining. Thank you very much, everyone. Oh, we got to 100 likes. Oh, we did it. Yay. Now I have to do another free one next week. So I can't do Monday because I'll be doing a Bookmap on that day. But you guys let me know in the poll, what day next week would you like me to go live here with you? First thing in the morning. You earned it. You got those likes. You want me here on Tuesday? You want me here on Wednesday, Thursday, Friday? Sunday, Monday, happy days. Tuesday, Wednesday, happy days. Vote right now. Let me know. And I'll be here for you. Johnny Silver Saturday? What would I talk about? I'd talk about Bitcoin all day. Last chance. Vote now in the chat or forever hold your peace. Okay, drum roll. What just happened? It disappeared. There we go. Oh, wow. This is a very split decision. So 36% won Wednesday. That is the winner. And I am sorry to the roughly 65% of you that aren't getting what you want. I did not realize it would be that much indecision. Also, only 19 of you voted. What's the deal, y'all? All right, guys. So I will be here live with you Wednesday morning. And I look forward to it. Thanks a lot, guys. Have a great rest of your day. And please consider joining the brigade. Become a pirate. You know you want